All right, so doing a deep dive into Allianz Malaysia Berhad and trying to figure out if they're a solid investment.
Okay.
And the listener has given us some pretty interesting clues to work with, the 2024 Q4 report and the 2023 annual financial statements.
Yeah. Those are always fun to dig through.
Right.
No pressure.
Well, they paint a pretty interesting picture.
Okay.
If you look at, for instance, their cash and cash equivalents, it's jumped up significantly from about 1.56 billion ringgit in 2023
Wow.
to over 2 billion ringgit in 2024.
So they're sitting on a pile of cash, it sounds like.
Yeah.
Does that mean that they're hesitant about the future?
Not necessarily.
Okay.
It could be a sign that they're being cautious in a volatile market
Mm-hmm.
or, strategically building up resources maybe for a major investment down the line.
So like waiting for the right opportunity to pounce.
Exactly. Yeah, we need to look for other financial indicators to see if they kind of back that up.
Right. So when you say indicators, what do you mean? Like the
Uh,
medical loss ratio? Yeah, absolutely. The medical loss ratio, or the MLR,
right.
tells us how much of their premium income is paid out in claims.
Okay.
So a high MLR could mean that they're not pricing policies well, or that they're seeing higher than expected claims.
Okay.
Now, the reports don't explicitly state the MLR,
Really?
which is something that we sometimes see.
Oh, interesting. So how do we figure this out then?
Yeah, that's a good question.
Right.
Well, we can look for clues elsewhere.
Okay.
So if you think about it, their overall profitability from insurance and investments actually dipped slightly in 2024,
Right.
even though revenue went up.
Oh.
So that could point to a rising MLR.
That's
For maybe increasing expenses in other areas.
So even without that specific number, we can kind of piece together
Exactly.
what might be happening.
Yeah, the trends and other figures can give us some valuable insight.
Okay, cool. So are there any other ratios then we should be looking at?
Definitely. So the combined ratio, which includes both their losses and expenses as a percentage of earned premiums, would be ideal, but that's also not directly stated.
Oh, wonderful.
Yeah, so we can look at the return on equity, or ROE, to kind of gauge how effectively they're using shareholder money to generate profit.
Okay.
And of course, there's the debt-to-equity ratio,
Right.
which is crucial for assessing their financial stability and risk.
Okay, so we've got combined ratio, ROE, and debt-to-equity ratio.
Yep.
Anything we can glean from the reports there?
Yeah, their 2024 Q4 report states their total liabilities increased by 9% to 22.66 billion ringgit,
Okay,
compared to 20.78 billion at the end of 2023.
got it.
While their equity grew to 5.83 billion.
Okay.
So a quick calculation puts their debt-to-equity ratio at approximately 3.88.
Is that bad?
It's higher than what's generally considered ideal for a stable industry like insurance,
Okay,
where a ratio below 2 is often preferred.
got it.
But again, context is key.
Right.
We need to see the trend over several years
Mm-hmm.
to determine if it's a red flag or simply reflecting their current strategy.
So we need more information, basically.
Exactly.
Okay, so we've gotten some insight into their financial health,
Right.
but we're also trying to get a feel for their long-term vision.
Yeah.
What kind of clues can we find in these reports about where Allianz Malaysia Berhad is headed in the next 5 years?
Well, these reports are primarily financial.
Right.
But the management discussion sections often contain hints about their strategic direction.
Okay.
So the 2024 Q4 report highlights that there were no major changes to the group's composition during the year.
Okay.
So that kind of suggests that they're focusing on optimizing their current operations rather than making like big splashy moves.
Right, so like strengthening their core before they
Exactly.
expand further.
Yeah, and they also note that their operations weren't significantly affected by seasonal or cyclical factors,
Okay.
which reinforces the view of their business as relatively stable and predictable,
Mm-hmm.
which generally is appealing to investors.
Right. Predictable and steady can be a good thing,
Yeah,
especially when it comes to investments, especially in times like these.
absolutely.
So, but we're still missing a clear picture of their 5-year plan.
That's true, but remember that substantial increase in cash and cash equivalents.
Yeah.
While it points to a conservative approach in the short term,
Okay.
it also suggests that they could be preparing for, a significant strategic investment or an acquisition in the coming years.
So playing it close to the vest, but there's potential for big moves.
Exactly.
That's an interesting contrast.
Yeah.
So how does this all tie into the idea of an economic moat?
Right.
You mentioned that was important.
Yeah, an economic moat refers to the durable competitive advantages a company possesses
Okay.
that protect its profits from rivals.
Right.
And Allianz Malaysia Berhad definitely has some elements that contribute to their moat.
What kind of elements are we talking about?
Well, first off, they benefit from the strong global brand recognition of Allianz. This means instant credibility and trust in the Malaysian market.
Right. The name itself carries weight,
Yeah,
especially in insurance when you want to feel secure about, who you're trusting your financials with.
exactly.
Yeah.
Additionally, their distribution network plays a role.
Okay.
Their 2018 annual report mentions an exclusive bank assurance agreement
Okay.
with a local commercial bank, granting them access to a large pool of potential customers through that bank's network.
So it's like a built-in customer base.
Right.
Okay, so we've got brand recognition,
Yeah.
we've got distribution, anything else?
Their financial stability plays a role as well.
Right.
We already talked about their growing equity.
Mhm.
And while their debt-to-equity ratio is a bit high, it's not at an alarming level.
Okay.
So the strong financial foundation allows them to weather economic storms, invest in growth, and potentially even acquire competitors.
So they're like a fortress.
Yeah.
Okay, cool. So we've covered their financial health. We've got some hints about future plans.
Yeah.
And we talked about their economic moat.
Yep.
What's the next step in our little financial detective work here?
Well, based on everything we've uncovered so far,
Okay.
it's time to put all the pieces together and give Allianz Malaysia Berhad a financial scorecard rating
Ooh.
from 1 to 10.
The moment of truth.
Yes.
I'm already trying to weigh all the factors in my head.
Yeah.
It's like trying to predict the outcome of a really complex game.
It is.
Okay, but before you reveal your score,
Yeah.
what are the key things that you're considering?
Yeah. Well, we've uncovered a lot about their financial performance. Some areas are strong,
Right.
others a bit opaque.
Okay.
But that brand strength and distribution network, those are major pluses,
Yeah.
contributing significantly to their economic moat. And their management seems pretty prudent, focusing on operational efficiency and stability.
Okay.
So those are all factors boosting my confidence.
It does sound like a solid foundation.
Yeah.
But I'm remembering some things that might temper that score a little bit.
Yeah.
We never did find those exact figures for the combined ratio and return on equity.
Right.
And weren't their insurance and investment profits actually down a bit year over year?
Yeah, those are valid concerns.
Right.
The lack of specific data on certain ratios does make it harder to assess their profitability
Right.
with, complete confidence.
Okay.
And yeah, that dip in profits is something to watch closely.
Okay.
It could indicate underlying issues,
Right.
or it could just be a temporary blip.
Okay, so mixed bag, I'm on the edge of my seat here.
Yeah.
What's the verdict? What is your score for Allianz Malaysia Berhad?
All right. Taking everything into account, I'd give them a 7 out of 10.
A 7.
Yeah.
That's not bad.
That's solid.
Yeah, solidly above average.
Yeah.
It really does seem like they've got a good balance of strengths and potential, even with those few question marks.
Yeah.
But before we move on, there's one more financial puzzle you wanted to solve.
Right.
Dividends.
Yes.
Why no payout this quarter?
Well, dividends are often seen as a tangible reward for shareholders,
Mm-hmm.
and their absence can raise eyebrows,
Right.
particularly when a company has a history of consistent payouts.
Okay, so did we find anything in those reports to explain this dividend drought?
The 2024 Q4 report itself doesn't really shed light on the reasons,
Okay.
which isn't unusual,
Okay.
as companies can adjust their dividend policies based on various factors.
Right.
But we do have an interesting clue from another source.
Okay.
The 2021 annual report for Allianz Life Insurance Malaysia Berhad, remember that's a subsidiary of Allianz Malaysia Berhad,
Right.
reveals that while they paid an interim dividend earlier that year,
Mm-hmm.
the directors chose not to recommend a final dividend.
Interesting. So there's precedent for them holding back on dividends,
There is.
but that still leaves us wondering why.
It does.
Any theories?
Well, several possibilities emerge. Firstly, they could be prioritizing reinvestment in the business.
Okay.
Remember that substantial cash reserve.
Yeah.
And our speculation about potential strategic moves in the future.
Right. So they might be holding on to those profits to fuel those future plans rather than paying them out to shareholders.
Exactly.
Okay.
Think of it as like planting seeds for future growth.
I like that.
Now, another factor could be regulatory capital requirements.
Okay.
Bank Negara Malaysia, the central bank,
Right.
sets rules about the capital buffers that insurers need to maintain for financial stability.
Okay.
And these can influence dividend decisions.
So if Bank Negara is requiring them to hold back more capital,
Yeah.
that limits how much they have available to pay out as dividends.
Precisely. And the 2019 annual report gives us some relevant context here.
Okay.
It discusses the risk-based capital framework for insurers implemented by Bank Negara.
Oh.
So this framework could be putting constraints on their ability to pay dividends.
So we've got reinvestment, we've got regulatory capital, anything else?
Well, we can't ignore broader economic factors.
Right.
You know, if the company anticipates economic uncertainty or a downturn, they might choose to conserve resources by holding back on dividends.
Yeah, battening down the hatches.
Exactly.
Makes sense. But I suppose we have to acknowledge that these are all just educated guesses.
You are absolutely right.
Okay.
We're connecting the dots.
Yeah.
But for a definitive answer on the dividend decision, our listener would need to consult company announcements or investor relations directly.
Right. It's all about doing your due diligence.
Exactly.
Okay. So now, no deep dive is complete without considering the potential downsides.
Of course.
What challenges and risks are on the horizon for Allianz Malaysia Berhad?
Let's start with competition.
Okay.
The Malaysian insurance market is a crowded space with both local and international players.
So no easy wins for Allianz Malaysia Berhad.
No.
They have to fight for every customer.
Exactly. And that intense competition can put pressure on pricing and potentially squeeze profit margins.
Right.
We don't see glaring evidence in the reports of them losing market share.
Okay.
But it's something to monitor.
Okay. Competition's one challenge. What else?
Well, we already touched on it. Regulations.
Right.
Bank Negara Malaysia's rules can have a significant impact. Remember that risk-based capital framework.
Right. And it's not just existing regulations. What if Bank Negara decides to change the rules of the game?
Precisely.
Right.
Regulatory changes are a constant possibility in this industry.
Yeah.
And investors need to be aware of that.
Okay, so we got competition regulations. Anything else keeping you up at night regarding Allianz Malaysia Berhad?
Well, we can't forget about macroeconomic factors.
Right.
The global economy has a way of throwing curveballs.
It does.
Things like inflation, interest rate hikes, even a recession.
Yeah.
Those could all impact the insurance industry.
It's true. It's like those nature documentaries where a tiny change in one part of the ecosystem can have ripple effects throughout.
It's a great analogy.
Yeah.
While the reports we have don't specifically highlight major macroeconomic concerns, that doesn't mean that those risks don't exist.
So we've got to watch the global scene carefully.
Yeah.
And consider how those big picture events might impact Allianz Malaysia Berhad.
Absolutely.
A lot to think about.
It is. And the thing about risk assessment is that it never really ends.
Right.
New challenges emerge, the landscape shifts. It's an ongoing process for any investor.
Okay, so we've explored their financials, their strategy, their economic moat, potential reasons for this dividend situation, and even the risks they face.
Yeah.
That's a pretty comprehensive look.
We've covered a lot of ground.
We have, but as you always say, the most fascinating discoveries often lead to even more questions.
That's right.
Speaking of which, we love to leave our listeners with a thought-provoking question to ponder.
Okay.
What's got you curious after all this deep diving?
You know, throughout this deep dive, we've been piecing together all these clues about Allianz Malaysia Berhad's financial performance, their strategic direction, even their risk tolerance.
Right.
But one element that's kind of been lurking in the background is their approach to technology.
Yeah, the tech angle, it's hard to ignore these days.
It is.
Do these reports give us any sense of how Allianz Malaysia Berhad is incorporating technology and digitalization into their strategy?
Yeah, it's a good question. And while these reports are primarily focused on financials, there are a few intriguing hints.
Okay.
Their 2021 annual report mentions that starting in October 2023, their IT services are handled by Alliance Technology SE.
Right.
It's a related company that's consolidating IT functions for the entire Alliance SE group.
So they're centralizing their IT operations.
Right.
What does that tell us about their broader thinking?
Well, it could suggest that they're aiming to streamline their technology infrastructure, or maybe reduce costs through efficiency, and even lay the groundwork for more ambitious digital initiatives down the road.
It makes sense in today's world to have a strong and flexible IT backbone.
Yeah.
especially for a company dealing with as much data as an insurance provider.
Absolutely.
Yeah.
Now, the reports don't go into detail about specific digital projects,
Okay.
but we can make some educated guesses based on, industry trends.
Okay, so let's put on our futurist hats for a moment.
Yeah.
What kind of tech-driven initiatives would make sense for a company like Allianz Malaysia Berhad?
Well, mobile apps are becoming increasingly important for customer interaction in insurance.
Right.
Imagine being able to manage your policy file, a claim, even get a quote right from your phone.
That's definitely the way things are going. Nobody wants to be filling out forms or waiting on hold these days.
Exactly. And behind the scenes, they might be using data analytics to better understand customer behavior, assess risk, personalize products and services.
So they're leveraging the power of data to gain a competitive edge.
Right.
Very smart. And who knows, maybe they're even experimenting with cutting-edge technologies like AI or blockchain.
Yeah, those are definitely areas to watch.
Right.
AI could revolutionize things like claims processing, fraud detection, personalized financial advice.
Right.
And blockchain has the potential to transform how insurance contracts are managed and enforced.
Okay, so even though we don't have all the specifics, it seems like Allianz Malaysia Berhad is at least taking steps towards a more tech-driven future.
Yeah, I think that's a fair assessment.
That's got to be a good sign, right?
It certainly suggests they're aware of the need to adapt and innovate, in a rapidly changing landscape. And that in itself is a positive signal for investors looking for companies that are positioned for long-term success.
Well, it feels like we've explored every nook and cranny of these financial reports.
I think so.
Analyzed their performance, their strategy, their economic moat, even their potential for embracing these new technologies.
We did it.
I'm exhausted, but in a good way.
Me too.
It's like I just finished a really satisfying mental workout.
It has been a thorough deep dive.
It is.
But as with any good investigation, uncovering answers often leads to new questions.
That's what we love about the show. So for our listener and for anyone out there who's curious about Allianz Malaysia Berhad, what's the key takeaway, the big question they should be pondering after this deep dive?
Well, we've seen evidence of a solid foundation, strong brand pact, decent financials, a seemingly prudent management team.
Right.
And they're dipping their toes into the digital world.
Yeah.
But the big question, the one that will determine their future success, is this. Can they translate those strengths into a truly dominant position in the rapidly evolving landscape of the insurance industry?
Wow, that is the million-dollar question, isn't it?
It is.
It's like they're standing at a crossroads, and the path they choose will determine their destiny.
Exactly, and that's the exciting thing about investing.
Yeah.
It's about understanding the present, analyzing the potential, and then making informed bets on the future.
Well said. And to our listener, we encourage you to continue your exploration of Allianz Malaysia Berhad. Dig deeper. Ask questions, and stay curious.
The more you learn, the better equipped you'll be to make your own assessment of their future prospects.
Thanks for joining us on the Deep Dive. We hope you found it informative and insightful.
We did too.
Until next time, happy investing.